Good morning and happy Monday to you. You're watching Trade Talk on BQ Prime, and my name is Alex Matthew. Now, as things stand, it's pointing towards a slow start or a weak start to the trading week here in India, and that is primarily because of everything that you're seeing across the globe. And you look at the trading screen and you see the Asian markets that have opened up, and the selling has only intensified as the China markets have opened. So initially, the three early risers in Japan, South Korea, as well as Australia were pointing to a weak start to Asia. And then the China markets opened, and the Hang Seng, as things stand, is down about 2.5%. And all of that is because of concerns about growth in China, certain developments in the property market that are not so good for the Chinese economy as a whole, and also a raft of economic data that will come out tomorrow. And that's pointing towards a slowdown in China's growth story and the possibility that there will have to be a lot of intervention by the Chinese government to spur that economic growth. But let's turn to India as well. You've seen that FII flows into the markets here have been a little choppy so far this month. You had selling at the start of the month, and then you had 2 days where you saw a net buy figure. And then on Friday, you saw quite a big sell number, as much as 3,000 crore or over that number of selling on a net basis. Apart from that, you're seeing that the markets are struggling to keep an upward bias, and you're seeing quite a bit of selling around that 20-day simple moving average for the benchmark Nifty 50. As long as we stay below that crucial 19,560 mark, that weak texture is likely to continue to be seen, and we're trading considerably below that 19,500 mark as we speak right now. The market is likely to also trade cautious ahead of the CPI number for the month of July here in India that is out later today. There's likely to be quite a big spike in that number from the June number, which stood at, by the way, 4.8%. The consensus estimate is pointing to a CPI reading of about 6.5%. And remember, this is why the Reserve Bank of India, in its monetary policy review, or rather the MPC, has raised its forecast for inflation for this year. Of course, quite a bit of that inflation has to do with vegetable prices. If you recall, you saw a spike in tomato prices, particularly in the month of July. But apart from that, you have a few sectors that you want to pay attention to. In Friday trade, you saw PSU banks that outperformed. That was the one bright spot. And Pharma, despite the cuts on Friday, continues to be watched very closely by a lot of market voices that are pointing to an upside for the sector as a whole. There will be a few stocks that we will touch on in the course of today's conversation. And finally, just to give you a sense of how things stand for FPIs as a whole, they hold more short positions compared to long positions in index futures currently. One of the stocks that you will want to watch out for in trade is going to be ITC on the back of its results. It will post its Q1 results today, and the top line number is expected to decline. That is seen at 16,657 crore rupees, and that's primarily on account of the higher base of the agri business. You see net profit at just above 4,800 crore. This is the consensus estimate, and margin is seen at 37.2%. But among the key factors to watch, like I said, the decline in revenues on account of the high base of the agri business, but the FMCG segment is expected to see a double-digit growth. The hotel business revenue is seen at 13%. And also any commentary on the hotel business is going to be watched very closely. You've had Sanjeev Puri on Friday speak about the fact that the continued interest in ITC in the demerged hotel entity will provide long-term stability. We'll have to see how the market looks at that. And of course, the cigarette business is expected to grow 10% in terms of volume and also 1% in terms of revenue. So those are the key numbers in terms of ITC, and any beat on that, of course, would reflect in the stock prices. Let's focus in on Pharma. Like I said, a couple of stocks to watch very closely today on account of results that have come out. One is Aurobindo Pharma, and we've got Monal joining in to give you some perspective on that. Monal, first we'll talk about Aurobindo, and then I'll come back to you on Glenmark. But first, Aurobindo, what are the key takeaways?
Morning, Alex. Aurobindo, the results have been have been okay. The margins have come in slightly above average and most in line with average in terms of parameters. Revenue is up 10%, EBITDA up 19%, margins at 16.81, and net profits up 10%. Net profits in line with the estimates by the consensus estimates. Now, we need to understand that the company came out with its results on Friday. So the earnings call is yet to happen, on which we'll get more details. But for now, we understand that they've had a secular growth across their geographies. Aurobindo has major revenues coming internationally. So their US formulations grew 11%. Europe grew 19%. Other growth markets also stood at 13% growth, and APIs as well grew 14%. So then the managing director said that the top line growth and margin has come by growth across key markets, and that's been the performance so far for Aurobindo. Looks good.
All right. So clearly a stock to watch. Glenmark is the other counter that we're watching very closely, Monal, and that's also on account of earnings. What was the print like this time around?
So Glenmark, I think their Europe business really worked for them. Their revenues were up 23%. Net profit was soft. It was 22% lower, but and that was also below the estimates. EBITDA up 46%, beat on estimates. Margins at 18.6 versus the 17.6 estimate. Their India business was soft. It only reported a growth of about 3%, and that was also reflected from the monthly IPM data that we get. US formulation business came in strong, rising 22%. Revenue in Europe grew 74%, and its subsidiary Life Sciences also reported a growth of 18%. North America is showing quite the signs, right? I mean, across the entire counter and the whole of earnings that we've seen, like a host of them, all of them have exhibited extremely decent, stable growth in the North America region. So I think that's what is the theme for the season, and that's what's keeping pharma really buzzing. So that's almost on similar lines.
All right. Thanks so much, Monal, for that take on both those counters. Now, the next stock that we're speaking about is a PSU counter. It has gained 4% over the last month, and it is up over 17% in the year so far. And there are, of course, several of them, but this one is called ONGC. We've got the review to talk about in terms of the Q1 performance, and we've got Vikas joining in to tell you more. Vikas, what can you tell us about the key watchables for ONGC?
Yeah, good morning, Alex. As you rightly said, ONGC had been performing extremely well, but looking at the earnings, the standalones have disappointed. But overall, if we look at the consolidated numbers, although the revenue has dropped by 10%, but overall the EBITDA and EBITDA margin has been quite good for the company. It's beaten estimates. As far as revenue from operations is concerned, it's fallen by 10% to 1,63,000 crore. But if we look at overall, the EBITDA and the EBITDA margin, it's kind of performed extremely well. The EBITDA is up by almost 60%, mostly on lower expenses. The expenses are, as far as cost of materials consumed, has dropped by 10,000 crore, and stock in trade has dropped by almost 23,000 crore for the quarter. The revenue, I would like to remind, has been lower, mostly because of lower segment revenues from across all the segments of the company, including refining and marketing, the E&P projects, onshore, offshore, as well as their abroad assets. So they all have not done good as far as the revenue generation is concerned. And as far as margin is concerned, margin has also improved to 18% compared to 10% last quarter. That's also mostly because of better realization. And this realization has come especially from the refining side of HPCL, because as far as standalone of oil and gas is concerned, there the realizations have dropped to almost $70.6 per barrel compared to last quarter. Overall, the analysts believe that full year numbers are expected to be much better even on the standalone side, because government's focus is going to be more on reducing the imports from abroad and more on natural domestic production, where as far as condensate, gas and crude is concerned, where ONGC is likely to perform extremely well. Back to you, Alex.
Thanks so much, Vikas, for that update on ONGC. It's a stock that you want to watch out for in trade today. Let's take a look at a whole host of other earnings that have come over the course of post-market hours on Friday and, of course, over the weekend. We've got Mihika joining in first to give us some of those details. Mihika, morning. What do you have on your list today?
Yeah, so first we have JK Cements, which beat estimates in terms of revenue, EBITDA, and margin this quarter. However, its net profit missed estimates. The company's revenue was up 22% and EBITDA improved by a mere 0.3%. Margins fell by 320 basis points and net profit was down 30% to 114.66 crores this quarter. Next, we have Rail Vikas Nigam. The company saw positive growth this year as revenues were up 20%, EBITDA was up 24%. Margins improved by 22 basis points and the net profit also increased by 30%. Then we have Sri Renuka Sugars. Revenue and EBITDA were up this quarter by 17 and 35% respectively. Margins saw 41 basis point improvement. However, the company recorded a net loss of 138.2 crores this quarter compared to the 114 crore loss a year ago. Then we have Siaram Silk Mills. The company's revenues were down 11% this quarter, while net profit fell by 68% to 9 crores. EBITDA was down 56.4% and margins fell 662 basis points. The company also has also approved a buyback of 16,61,530 fully paid up equity shares of face value ₹2. This represents around 3.54% of the total equity shares of the company. The buyback price is fixed at 650 rupees and the total buyback aggregates to 107.99 crores. Then we have Network Technologies. Revenues were down 14%. EBITDA by 8% and net profit also fell by 9%. However, margins saw an 89 basis point improvement. The company's order book stands at 99.4 crores this quarter with 2,284.5 crores in the pipeline. Private cloud and HCI had the highest revenue contribution this quarter at 29%. And this was followed by supercomputing and AI offerings at 25 and 15% respectively. Then we have Campbell Retail India. Revenues were up while EBITDA, net profit, and margins fell. The company added 14 new stores this quarter, bringing their total retail area to 5.5 lakh square feet. The company saw 5.7% year-on-year volume growth, with menswear contributing to 83% of their revenues this quarter. The company's board has also recommended a final dividend of 2.5 per share for FY22 and 23. And the record date set for the same is 15 September 2023. And lastly, we have PTC Industries. Revenue and EBITDA were up 55 and 82% respectively. Margins improved by 400 basis points and net profit also saw 292% growth this quarter. The company took part in the Chandrayaan-3 mission as it was responsible for the pump interstage housing, which is a critical component. And the company also acquired an electron beam cold hard remelting furnace and a vacuum arc remelter through its wholly owned subsidiary Aerolite Technologies, which helped it build material mills in the part of its aerospace segment.
Quite a lot of details there. Thank you so much, Mihika, for joining in and for giving us those updates. Varsha is in studio to tell you more about what's on her list today. Morning, Varsha. What do you have for us?
Yeah, so I've got a bunch of companies who have, posted their results. So the first that we have is Astral. Now the revenues were up 5.8%, but EBITDA margins was at 15.71%. Now the plumbing volume grew almost 31% for Q1 FY24. And looking at the robust demand in the market for the pipe products, companies aggressively putting up new investment into pipe vertical and also planning to put up almost 3 units of pipes. The next company that we have is NRB Bearings. Now, the revenues were up 15.2%, but if you see, the PAT was down. That is, net profit was down almost 22.52% now because there was this exceptional item of negative almost 5 crore in Q1 FY24. The next company that we have is Rashtriya Chemicals and Fertilizers. Now, you know what is happening with chemicals. There's this headwinds in specialty chemicals and agrochemicals. So this company is no exception to this. So if you see, the revenues were down 18% while the net profit was down almost 77%. Now also there was this exceptional item of negative 25 crore in Q1 FY24. The next company that we have is Timken. Now the revenues were up almost 2.6%, but PAT was down almost 23.6% at 90 crore versus 118 crore. The next company that we have is Galaxy Surfactants. Now, if you see, there has been almost 7.4% of volume growth for this quarter, while India delivered solid double-digit growth for this quarter. The inflationary pressure and the high channel inventory continue to adversely affect performance of surfactant demand in Africa, Middle East, and Turkey, and of course, specialty care demand in North America. The next company that we have is Phenolics Cables. Now, there was good growth except in cables and wires, as the good growth is expected in cables and wires because, due to the high investment in the infrastructure by the government. The next company that we have is Patanjali Foods. There was a good uptick in revenue, almost 7.7%. But if you see, the EBITDA margins were at 2.17% versus 5.43%. And due to this, the EBITDA was down almost 57%, while the PAT was down almost 63%. The next company that we have is Amara Raja. Now, the revenue was up 6.7%. But if you see, the revenue growth was aided by healthy volume growth registered in the automotive aftermarket as well as from the telecom and UPS segments. Now we need to see how this lithium ion batteries will go up, because for the car makers the battery cost is really high. It's almost 40 to 50% of their cost. So whether this the electric vehicle companies will go for in-house manufacturing of the batteries, we need to see. But Amara Raja is doing investments in the lithium ion batteries as well. The last company that we have is Krasna Diagnostics. Now there was good uptick in revenue, almost 23%, but net profit was only 2% up. Now why? Because there has been expansion going on in the company. Also, if you see, the company has executed agreement for Assam pathology tender, almost 10 labs and 1,256 collection centers. Also, there's this update in Rajasthan contract. The company won back the Rajasthan contract of almost 450 crores.
Which they had to make a legal challenge to
correct.
do. All right, thank you so much, Varsha, for those updates. A lot of stocks, and you take a breath. Let's go to Saloni in the meanwhile. And Saloni's got a long list as well to tell us about. Saloni, morning, what's on your list today?
Good morning. So first we've got NHPC. So there was marginal growth in the company's top line and bottom line. The EBITDA margins were fairly strong at 54.57% this quarter, a slight drop from over a year ago. This quarter also witnessed a jump in the generation expenses from 271 crore to 518 crores. Next, we've got HEG. So the company saw a drop in its revenue, EBITDA, and net profit this quarter. The revenue from the company's graphite and power segments saw a drop, while the expenses of HEG saw an increase. Third, we've got Voltas. That saw good growth this quarter, with the revenue being up 21% and net profit surging 18%. The top line figures beat estimates, while the bottom line missed estimates by approximately 40 odd crores. The rise in the company's expenses was due to the increased consumption of materials, cost of jobs, and services expenses. Next, we have JCorp. That's our degrowth across all fronts. The steel segment revenue of the company dropped from 24.89 crore a year ago to just 20 lakhs this quarter, while the plastic processing segment of the company did much better as compared to the steel segment. It was still a drop as compared to a year back. The real estate segment was the only one that saw a growth of about 60 lakhs. Fifth, we've got Nalco. So the company saw a decline in its top line as well as bottom line. However, it beat both estimates. The margins also saw a decline over last year, missing estimates. The revenue from the company's chemicals and aluminium segments both saw a decline. Next, we've got Pfizer. That saw a decline in its revenue while a rise in its net profit, both missing Bloomberg estimates. So the revenue was down 10%, the EBITDA was down 42%, and the net profit was up 2.8 times from 33 crores a year ago to 94 crores this quarter. And lastly, we've got FSN e-commerce ventures. So the company saw an uptick in its revenue of about 23.8% and a 59.6% uptick in its EBITDA, while it saw a decline of 26.7% in the net profit.
All right, thanks so much for that update, Saloni. The last one, of course, is Nykaa, in case you weren't familiar with the listed name. Let's talk about business updates and quite a lot of news flow also to track this morning, and stocks are likely to react. We've got Himansh joining in studio to tell us some of those details. Himansh, morning.
Hi, morning, Alex.
What do you have on your list today?
Hi, so I have Cartrade Tech, where the company has completed a 100% acquisition of OLX India's Classifeeds and auto transactions platform for about for a consideration of 535 odd crores. With this acquisition, they aim to create India's largest auto Classifeeds platform with 68 million listings, with 68 million active users and 32 million listings, with about 1.3 million annual vehicle auctions. Cartrade Tech will now operate under the following brands in India, which are Carwale, OLX, OLX Auto, Shriram Automail, Bikewale, amongst others, and it posts a strong presence in over 100 plus cities. Then Adani Ports and Deloitte amicably agreed to end their auditor-client relationship, with the audit committee accepting their resignation as on Saturday. To fill in the casual vacancy, the company has now appointed MSKA and Associates as their new auditor. As per the board's code, Deloitte's resignation stemmed from a desire for a broader audit role across Adani portfolio companies. The audit committee, however, clarified that these reasons were not convincing enough, and it's beyond their jurisdiction as to what the other Adani portfolio companies appoint as their auditors. Regardless, we have Jio Financial Services. The company has recently allotted 635.33 crore shares to RIL shareholders. In line with this development, the shares will remain frozen until they are officially listed on both NSE and BSE. The company has applied for listing on both stock exchanges. Then we have Lupin, where the Lupin's Mandideep Unit 2 facility has completed a GMP inspection by the US FDA. The inspection, which took place from August 7th through 11th, concluded without any observations. And then we have two key developments coming in from the state of Arunachal Pradesh. Firstly, NHPC has inked a memorandum of agreement with the government of Arunachal Pradesh on Saturday for development of two hydroelectric projects with an aggregate capacity of 3,800 megawatts. The MOAs envisage the development of two projects within this pack, one for 2,000 megawatts and one for 1,800 megawatts. And then lastly, we have SJVN, where following up on their order win on 24th of July, which they informed the exchanges about, the allotment of 5 hydro projects, the 5,097 megawatt ones, have now been signed with a memorandum of understanding with the government of Arunachal Pradesh. Now, this pack of projects includes one of India's largest hydro project under development, the 3,097 megawatt Italin hydroelectric plant. Now, the construction of all these projects put together involves an investment of about 50,000 crores, and the projects will also add a capacity of over 20,000 million units of annual electricity power. So some key developments of these to track, and let's see how the stock reacts in action today.
Certainly, and we're just a few minutes away from that. Thanks so much, Himansh, for those updates. Like I said, just a few minutes away from the start of trade, and you'll find all of the action right here on BQ Prime, so do stay tuned. Thanks so much for watching.